Hey guys, so what I'm going to show you right now is another one of our strategies called Diversified Leverage. This strategy performs very, very well, and you'll see what I'm doing right now is I'm actually running a back test, which will basically say if we ran this strategy since 2016 is what I actually have here. We said the dates 2016, January 1st. This is because the symbols existed at that point in time, and it's going until the 22nd. March 1st, 2022, which is around the time I'm recording this video right now, so about right up until today. Okay, so we're running a back test over that time period and saying, if we had run this strategy over that time period, what would have happened, right? And then what it's going to do is it's going to automatically buy stuff for me. So here's my broker. I have, it's $100,000 right now. This is paper money right now. But after this thing runs the back test, it's automatically going to buy for me. Here's the result of the back test. We'll talk about that in a second, right? It's also going to give me a nice little tear sheet. There we go. And then as soon as that's done, it's going to actually buy for me. And you see that it automatically bought a bunch of things for me. I didn't do anything, right? You just see it automatically bought it. And you see how that's going. So this bot will run for you pretty much forever if you wanted to, right? And will constantly be doing its main strategy, right? So let me tell you about the strategy. Basically what it does is it takes a portfolio of assets, right? So all these assets here, we have TQQQ, UPRO, UDAO, EDC, TMF, UGL, all the way down to VIXM, right? TQQQ, we have a 20% allocation. UPRO, we have 10%. UDAO, we have 10%, right? And what these all are is they are all leveraged indexes. So these are all 3x leveraged indexes, right? TQQQ being the NASDAQ 3 times leveraged, right? UPRO is the S&P 500 3 times leveraged, right? So 3x leveraged, right? 3x leveraged NASDAQ, 3x leveraged S&P, 3x leveraged Dow Jones, right? Et cetera, 3x leveraged emerging markets, right? And all these things are going to be automatically bought for us in our portfolio. And what it's going to do is it's going to very intelligent and all the way down to, by the way, this other thing down here, which is a VIXM ETF, which is very good at reducing the risk of our portfolio. Okay. So there's a specific allocation. We've done a lot of back tests around this, and it's actually done quite well over time. And what it does is it buys these symbols, and then every 4 days, it does a rebalancing, right? So when you buy these things, right? So right now we bought in a couple of proportions, right? There's, $5,000 went into ACQ, which is silver, right? 3x leveraged silver. TMF has $30,000, just leveraged treasury bonds, 20-year treasuries, right? So automatically bought all that stuff for us. And what's going to happen is over time, these things are going to drift, right? So let's say the NASDAQ does very, very well. So this thing shoots up, and this $20,000 turns into $30,000, which can happen quite quickly when you have a 3x leveraged, right? You can make a 50% return on this thing really, really fast, right? But the thing is that if you only own that by itself, you're going to be taking this crazy, crazy risk, right? It's, honestly, you can make a lot of money doing it, but you'll wake up in the morning some days and you lose 60% of your money. It's possible, right? But when we have it in a portfolio like this, we're able to reduce the risk a lot, right? So we're still able to get very, very good gains, but without taking on a crazy risk, all right? And the way that we do that is by using these proportions, but then also by rebalancing. And this is very important, rebalancing every 4 days, right? So let's say TQQQ, it went up, NASDAQ is up, we sell it, we take that profit, and we put it into the other ones that didn't do so well, right? Let's say gold was down, so we bought gold during that time, right? Or maybe the reverse happened. Maybe the stock market crashed, right? And then, but when the stock market crashed, gold tends to do well, treasury bonds tend to do well, this VIXM, this tends to do very well when the stock market crashes, right? So we'll have money that we sell those things, and we take that money and we put it into the stock market. So we're automatically buying low and selling high, right? It's a very smart strategy. It's made quite a bit of money over time. And let me show you the results. So here are the results of the back test. Okay, you can see this is all the buys and sells, right? The green and the red. If I take those away, you can see just our strategy, which is in the blue, right? Versus the S&P 500, which is in the red. And you can see that we have smoked the S&P 500. We've done more than double, and that's despite the market doing very badly the past few days, or actually past 2 months. This is, the time that I'm recording this right now, this is probably the worst stock market performance over the past month that we've seen for years, basically since the pandemic happened, right? And yet we're still doing very well, right? We're still smoking the stock market. We're still doing extremely well. And I can imagine when we come out of this little slump, we're going to be beating the S&P even more, right? But this is in a bad time. In bad times, we still beat the S&P 500 double, right? So our benchmark is S&P 500, SPY. Over this time period from 2016 to 2022, March 22. So that's right, like 6 years, right? 6 years, S&P did well. It did 115%. We did 221%. We more than doubled it, right? And you could tell on the chart, right? And this is even despite it being in a bad situation right now. This is at bad times, right? In good times, it looks even better, right? Our Sharpe ratio is better. Our Sharpe ratio is 0.87 versus 0.78 for the stock market. Sharpe ratio is basically a measure of risk versus return. So we're not only doing better, but we're doing better even taking into account risks, right? The max loss that happened here, when the stock market fell in 2020, this is that big crash here, right? When the stock market fell, it fell 35%. That was, quite a painful time. I remember going through that. I actually made a lot of money during that time because we were following this sort of strategy where we were able to rebalance and we had a lot of money from treasuries and were able to buy a lot of tech stocks at the time, which made us a lot of money, right? During that time, the stock market fell 35%. Yeah, sure. The strategy we have fell 44%. So it did fall, but pretty similar to the stock market. It's not much more than the stock market. It's about the same risk, right? But we still doubled the returns, right? So your risk to return payoff is very, very good using this strategy, right? Whenever you go through this, and if you were to take our course, you also learn how to make these tear sheets, and you can make a lot of adjustments, by the way. Like I have all those proportions, and you can back test different things. We actually did this live in class the other day, where what else do you think we should have in here? We tried, what if we have gold what if we put more money into gold? What if we had oil in here as well, right? Would that have helped us? So putting in all these different types of assets and different combinations helps us come up with a really strong portfolio that makes some good money. And you can see all these metrics here. We see that we beat the S&P 500 in almost every single year, right? We beat it in 2016, 2017, 2019, 2020. 2018, we did not beat the stock market, right? This year, we're off to a slow start, but I bet you we end to the positive. And last year, they beat us, but not by much, right? So we're doing very well compared to the stock market overall, right? You can see here, we can look at our rolling volatility, right? We have a lot of different metrics so we can understand our strategy for and how we are doing relatively speaking. We have our drawdown periods. So when did we lose money and how, right? So we understand it very well. We understand risks very well. And we also have our times where we made money or lost money by monthly basis. We see that even in 2020, we lost that 21% in a month, but the next month we made it back almost immediately, right? So we came back very quickly, right? And yeah, you can see a lot of different metrics there. You can see that this thing is running. I can have this just running on my computer, or I can put this in the cloud and just have this run all day long, every day. I don't have to touch it. It's just going to make money for me. Kind of like how these graphs made money, right? We're going to be having these types of returns using our strategy, right? According to our back tests, right? So thank you very much for listening. This is our presentation on diversified leverage. And I hope you enjoyed that.